Now, we're just getting some inflation figures for the UK for the month of May, and it is higher than expected. So for the month of May, inflation rises to 2.9% instead of the estimated 2.7% that we're expecting. And if you look at the RPI, that's rising 0.4% month on month. So it's the fastest growth we're seeing since November 2012 for core inflation. So this is what the pound is doing, 126.99. We charted UK consumer spending year on year. And you can see, actually, the money chart, I think, is probably this one. So this is the best chart to look at because it shows you inflation with basic wage growth. And you can see, unless they're actually following each other, it means that as a UK household, you may just be thinking that you're a lot worse off than you are. Nandini, how worried are you about this trend? So inflation came in not only above UK wage growth, but higher than expected. This is weakness in pound and also negotiations for, negotiations on Brexit could lead to tariffs, and that would mean inflation goes even higher. Even higher,
yes. I'm not surprised that the inflation numbers are coming in as high as they are, and even actually above expectations. When you look at some of those purchasing managers' indices, input prices subcomponent, overlay them on inflation, when that purchasing managers index for input prices shoots up, which it has been, you see inflation tick up quite strongly following that. So we should be expecting higher inflation on a low pound and that higher cost of goods. But I think you're right in pointing out that chart as one of the most important charts for the UK's future. Consumption is 60% of UK GDP. And when real wage growth is falling for about a few months, as it has been, and falling even deeper than it has been before, that's really pinching the consumer, right? How much are they going to spend on the high street? How much are they going to buy future purchases, whether it's autos, cars, whatever it may be? That's a very difficult position, and that's why Mark Carney at the Bank of England is watching real wage growth as close as he is.